Hi, my name is Sagar Tejwani. I work as an assistant vice president in global corporate finance compliance in First Abu Dhabi Bank. I have been a mortgage credit analyst for around 2 years in my life, knowing the UAE real estate market. And that's why I'm here, to give you a bit of insights on how economic trends make a huge difference to the lending cycles and mortgage real estate financing.
Nice to meet you. Hello, everyone. I hope everyone's doing an amazing time. I'm Samu. The moderator completely butchered my name, but it's okay. It's okay, no problem. Western education. I'm Samu, and I'm a real estate broker, sales and international channel partner with SOBHA. I've been in this industry for close to 5 years, half a decade, I like to call it. And I'm absolutely honored once again to be in front of you guys and talking about real estate and the fluctuation of the market in the industry. Yeah.
Good afternoon, everyone. I'm Colonel Anurag Trivedi, a retired Indian Army officer. After 2015, taking my premature retirement, started my business in the field of infrastructure development, basically in commercial side, and that's what I'm.
Nice to meet you. So guys, we can start with the impact of real estate, because I feel like we're all in the same particular industry. I've heard that you're in the real estate in Dubai, right?
Yeah. We are basically into development of commercial properties.
Oh, okay. And how has that been like for you with considering the market uncertainty in the past years?
See, with hard work done by our Honorable Prime Minister Narendra Modi, there is a lot of investment from foreign which is coming. There are 3 new cities which are being developed in around Delhi NCR. Yamuna Expressway Development Authority during February 2023 has attracted $3.2 trillion investment from various countries, as well as G20 summit which has happened a few weeks back. So it has attracted around 4.2 billion investment. Few new airports are coming, so those areas are also developing. We by 2030 we'll be having 100 smart cities in our country. The work is already in process. So a lot of infrastructure growth is there in India. And infrastructure means real estate. For a customer, he is getting a growth from 11 to 16% depending upon the location and what kind of property is taken.
Okay, so from an economic cycle perspective, when we talk about 2 years ago, when we had COVID, and I believe the entire markets had slowed down, right? And over this period and the coming period, we see that the Indian market is going to do pretty well. So we all do agree, right, that the economic cycle is have a huge impact on the real estate market. Is that correct?
Yeah, you are very right. There were some dips in the property rates. However, the market in India was balanced because property is taken as a worth. So generally people were not selling their properties. However, as a builder, I can say, because we have to run our show, we were giving very good offers like 1090, 2575. For a villa which is costing 2.5, we are giving them on 25 only. So just by paying 10%, now that villa is 5.0. So they've gained very huge margin, maybe 300 to 400%. Though time was bad, everyone was basically shattered. But some good investors have taken good decision, and they've been benefited very well. The Corona, this recession couldn't be compared as 2008 recession. That was entirely where, because of the loan, because the banks going insolvent, there was a huge recession. But Corona was there, but we have not seen it as a very big recession for India.
Okay. And when you talk about the property market, especially, let's focus on the Asian market and especially more towards the Indian market. So basically, do you think that the pricing of the real estate in India is being hoarded, or is getting overheated with the inflow of foreign funds, or do you think it's still at a par area, or where do you feel what is the overheating bar for a property? You are a builder yourself, right? You know when it's overvalued.
Well, I will tell the story which my father told around 4 or 5 years back. कि while during his visit to Delhi, एक property उन्होंने देखी थी which was just say maybe $1,000. Now it is 200, 300 times more. So buying a property, decision should be quick. It's not overheated. So basically, builders and brokers, they drive the market. Say there is a ready to move in property, XYZ amount is there per square feet. So the under construction property which is going to come up will be at least 30% will be launched as a with 30 to 40% lesser price. So this 40% advantage is being looked. This basically looks after the interest of the investor. So basically, the people need to just do the due diligence about the property. However, market is growing at a very good speed, and because there are 3 smart cities which are coming, and a lot of foreign funding is coming, lot of development, lot of industries. Yesterday, I was just sitting with the Health 2.0 conference. So there was one of the person who is manufacturing some equipment. So मैं बोला कि why not you supply to India? So then he told me that there is some medical park coming there where this equipment has already been proposed to be manufactured. So growth is there. All kind of investor, industrialist, businessmen, they can come, and government is basically giving lot of rebates in terms of like tax rebate in the income tax for first 5 years, then on GSTs also, that service tax which we pay, and various other things like lease are given for 99 years at the zero payment. So a lot of government's initiatives for which is attracting the means for foreign funding. And when these companies will develop the small societies, so small localities, the residential complexes, commercial complexes, they will come up.
Pardon me for my ignorance, but just wanted to understand, when we talk about the foreign investment coming in, say in any country, if it's even UAE or if it's even India, basically the foreign investment could be of 2 types, right? There are institutional investors who are actually more from a commercial perspective who are investing, and there are those who invest usually from a housing perspective. They want to have a house. So basically in UAE, usually people prefer having a leisure house, right? Especially from people throughout the Europe and even India per se, who are the rich HNI. So such things are understandable where money is flowing in, government is giving them
this
attractive
foreign
rates.
investment which I was talking about, it was basically corporate funding for business purpose, not the commercial purpose. This like the NRIs from this place are buying properties over there. That is entirely different thing. And lot of NRIs from UK, Dubai, USA, Canada, they are investing heavily.
And what do you think the interest rate? Because currently the interest rates are pretty high, right? And even still the real estate market in India is growing at pretty fast, really, really good pace. So in those lines, especially when interest rates are high, the individual income on an average, what I understand is between 1 to 2 lakh rupees, right? And they take long-term loans usually for the first or the second house. So in those lines, where do you feel is it heading? And what if, because India is out of the recessionary plan for like recessionary list, what was said by I think one of the leading institutions. I think it was Fitch or somebody. Sorry, don't quote me there. But I'd reviewed, and it was saying that different countries have different recessionary possibilities over the coming 1 or 2 years, and India was among the lowest at that period of time. But let's per se, right? Like there's an interest rate tightening on one side, and the demand is still not closing out. So and in case if something forbidden happens in terms of the economic cycles or anything, then where do you see things going? Do you see a lot of NPLs? Because the market currently is getting really bullish, I feel.
Market currently is bullish. Rates are not very high. It's 8.4 is the minimum rate available for the residential properties and 13% for the commercial properties. So these are very well affordable, and Indian economy is going at
These are flat or reducing balance?
Yeah,
These are flat rates or reducing balance?
reducing balances. And basically, India is growing as a very good economy, and you must be listening. So that like US been impacted, but there is no impact on India. Indian industries are growing because we are young. So and we go by the planning. So the things are moving in a very good way.
I appreciate that. Just another thought. In every market, there's 3 cycles of which it goes up, it goes down, and there's a period where it's in a sideways movement. Currently, which phase is Indian industry or in the Indian market?
Till 2030, we are only seeing the upside. Maybe it's a small fluctuation, maybe because of some corona sort of thing which comes up. But till 2030, we are seeing only the upside.
Actually, apart from the economic cycles and how things are functioning, there are some other fundamentals also which really make a huge difference to the property rates, like countries like Dubai. Like I won't say Dubai exactly because Dubai has enough barren land where they can keep building more buildings. But cities like, say, Mumbai, or when you're talking about Singapore per se, right? Or Hong Kong per se, they have limited land, right? And apparently, no matter, regardless of the economic condition, right? Regardless of the economic cycles, the rates keep going up because the housing needs are there, and there is no space to fulfill them. So, there are even adverse events in those lines, like apart from the trend, this also keeps happening in a few cities because there's a lack of space, which drives up the prices like crazily. Like Mumbai, I think it's covered from sea from 3 sides, I guess, right? And similarly, Singapore is also pretty much really small as an area. Hong Kong is a really small country, state as well. So in those lines, yeah, those also really have. Let me give you a bit of insight on the UAE market, right? So, pardon me with the current dynamics, but because I was working in the mortgage credit previously, where I used to sanction investment and residential loans, and what we have seen is that, Abu Dhabi. I'll talk about Abu Dhabi and Dubai because most of the purchases happen in this area. So, there is a huge inflow of funds, foreign funds, for buying luxurious property in Dubai, and over the time this has not stopped, regardless coming, especially after the Russia-Ukraine. Still it continues. A lot of money continues to flow from Russia. Government has become a little vigilant, but what is AML related, anti-money laundering related, what is not. It's trying its level best to ensure that it can comply with all the KYC and all the requirements. But still, you see the growth of Dubai luxurious products being there, and it is I have seen it out of the economic cycles. Apart from 2008, where the market fell really bad, and there you could get the same house really cheap. But apart from that, even in Corona, the housing price were only slashed like at 20%, 25%. So still there was that intrinsic value of the property, of the luxurious property, even after the bad recession, like even after a bad incident hitting in. So another factor which adds to the which deviates from the economic cycle is the value proposition. the value proposition will remain, so the property will be intact. This is a similar case to residential housing in India, because you have one house, you're staying in that house, it has intrinsic value for you, it has a value proposition for you. You don't want to sell it unless and until you're in a dead dying situation. So things like that from a luxurious perspective happens in Dubai as well. The people don't want to send the Dubai housing until unless it's really important, and especially it becomes a status symbol for many as well. They like to come here. Plus now there's cloud seeding happening, which keeps the summers a little bit cooler. So it's becoming like a all-time come by Dubai season, UAE, kind of
Absolutely.
tourism. So because of that, people want to hold houses here. So that's how the economy here has been like. It's very interesting how UAE government is able to sustain the property value.
I know, right?
Especially when they have got such a lot of barren land, right? Sometimes it does feel like a bubble, but it doesn't. But many a times it doesn't, because the amount of value add which UAE government gives, in that way, or the value proposition which Dubai gives, sometimes just makes up for it many a time. So it's not only about economic cycles. Even in economic cycles, somewhere or the other, the money needs to go. And if you are on top of your league, you will surely have those funds coming to you, and that economy will blossom even in hard economic times. So that's there.
Thank you for that. Just one question: what do you foresee the real estate industry in real estate market here in Dubai in the next 10 years? Considering where we're coming from, and right now there's many people coming to Dubai, and then in the next 10 years, what do you think of that?
See, basically, it's really astonishing how a government, takes in, takes the land back from the sea, prepares a palm, sells the houses there, and people are willing to buy, and they know global warming is happening, and one day the water might just come up, right? So we know that Maldives might not be there after 25, 30 years. So we might know that this might also not be there until and unless, the government puts in rocks and everything to ensure it's on the top. But still people are buying it, right? So till the people are buying something, there's a need for it, people think it adds value to them, they will keep going on. And if you talk about Dubai in particular, I'm a pretty pessimistic person, but with the view of Dubai, I am a little optimistic, because every time they are where we feel, they're going to drop the ball, and they do something new. So, hats off to, their advisors, hats off to the kings here. The way they are managing is amazing. One thing which I like to add is that where is it going to go in the next 10 years? I see it, the Dubai city expanding more and more. The best part about UAE is it has limited population and it has ample of land. Like, they don't have to worry about land, because they can just, just treat the sand and make a building on it, right? So it has a huge land, man. So until and unless, and they're not going to fall short of it, because of the reason that almost 90-95% of the population who lives here are expats, right? And they usually go back to their home country after retirement. So they usually, even if they have a house, it's usually for an investment purpose, right? And then they go back, usually. This is what they do. So, in that way, the amount of people in the economy will always be low. They always keep developing new things. So there'll be new things always coming in. So tourism, people who are rich will always like to come in. So, these are all things which add to their advantage. And they take good analytical, benefits out of it. And they develop stuff which will help. Like, I have heard a new project, I'm not sure. It is something I read and I saw on, the social media, but I think it's there. They are going to create like a circle next to Burj Khalifa. Like, it'll be like inculcating Burj Khalifa, and it's like a three buildings, which are going to come with the circle towards Burj. Like, in between there'll be Burj Khalifa and there'll be a circle of buildings. Like 3 buildings with connection. So I don't know whether they're developing that or not. It's known as a ring or something. So if they do that, perfect. If they don't, but such projects which are not thought of anywhere else come here. And obviously, when people get something unique, something luxurious, they always want to go for it.
Absolutely, absolutely. I liked what you said, but just to challenge you on that, I do not recommend taking information you've received from social media to incorporate your research. But no, that's just like a sideline. Many people, when Burj Khalifa was first thought of, or first being in the development phase, many people did not believe that Dubai can actually pull it off and create the tallest building in the world. So many investors were given an opportunity to invest in Burj Khalifa while it was still in a construction and development phase, of which the prices were incredibly low, insanely low, just to put your investment there and then wait, you know. But now Burj Khalifa is here and it's worth so much money, and people are bidding themselves up, and they're just like, I should have went in like 10 years ago, you know. So yeah, Dubai is just innovative, very dynamic, and it's just coming up with many new and things that I've never not seen, and you just see them here in Dubai, you know. I just wanted to add on that. One question though, considering the population in India, what is the unique selling points of Indian market, real estate market? Obviously it cannot be compared to the Dubai real estate, but like, what is the unique selling point and the reason why international investors come to India and purchase property there?
The reason, because the industrial growth as well as the growing market. So these are the basically USP. So big companies are coming, then the small companies also coming as subsidiaries. So the requirement for residential and commercial always on. But my advice was like the impact of fluctuating economy. Like people generally tend to block their complete money, and they are the biggest sufferer while during some sort of recession. Though we should, the one should always have some liquidity for say Corona type thing comes or some other situation comes, so that he or she can utilize that money to cope up. Otherwise, during the recession or otherwise also, selling always takes time. No property can be sold in a day. It will always take 1 month, 2 months, 3 months time it will take. And during the recession, you don't know. So one must always have a liquidity for himself or herself, so that the family matters can be coped up.
And just to add to that, you know, even you took a good point out, and the thing is, even builders should have liquidity, because of the reason that when there are tight times in an economy and they do not have any other source of funding, and there's no much buying happening, you know, to continue the project, it's really important that builders have enough liquidity or enough assets to pledge in the bank if, you know, they can get some liquidity from there. So that's an important area as well. A lot of builders I've seen, especially in the Middle East, I have noticed this back in 2008, even in India, a lot of projects, right? They get halted for infinity period, because because they do not have enough funds to continue those projects. And so, you know, like we always say, when any firm makes an investment anywhere, they have a backup or unallocated capital kept aside. You know, so for each project there needs to be an unallocated capital kept aside, so that, you know, in case if there's some adverse event, you know, builders can allocate that, and that plays a really important part, because construction, especially the commercial and residential constructions, I think add huge value to the GDP growth every year.
Yeah, you're very right. Liquidity for a builder also, it's a very important aspect. However, this liquidity comes from their own contribution, the customers' money, the cycle which comes, then the banks are available, as well as their funders are there. So these are the sources. However, the RERA Real Estate Regulatory Authority, it ensures that the adequate liquidity is available with the builder. Otherwise, they will not going to sanction the project so that they can move ahead. So RERA is playing in India and Dubai as well, because Dubai RERA came first in 2007 and in India 2017. So these both RERAs are doing wonderful job to ensure the customer safety as well as the builder safety.
That's what government needs to intervene in those lines, and I hope they are doing the job very well.
You had previously told me that you work in an investment bank, right?
I do work in an investment bank right now. I'm an investment banker.
Yes. So the type of client that come to you and tell you that they want to invest in real estate, what specifically do they come and look for?
Okay, see, when I say investment banking, it's a little different from the real estate, being a realtor or making a real estate investment. That's more towards being a mortgage advisor, or no problem with that, because I was a credit analyst in those front. I have really good friends who are mortgage advisors and realtors, companies, a few of them I know. So, yeah, so your question was that?
Yeah, you just told me, but I was just asking in the sense that what do clients come to you and say, in terms of real estate?
See, basically, there are a few clients, I'll just tell you how clients differ. So you need to understand how clients differ, right? There are clients who are who come from a very mediocre background, are job-based people, making all right money. So they go okay, you know what? They're working here. So they're like, I want to have a house, so that I can save up on the rent, because they know that they are an expat at the end of the day. They will be moving back to India someday. And for the time being, if they stay in that house for 10, 15 years, they are, saving up on the rental amount which they give every month. So they do come to us regarding that. A lot of people on those front. There are people who take investment opportunities, who take off-plan. Now, what is off-plan? Off-plan are those real estate investments which are currently in the construction stage, and they are below the market value usually. So people take that, and as soon as the property is built, they sell it off, so they make a good amount of money on that. That's another type of population which comes to the bank. Then there are other people who want to have their second, third house and want to make a rental income chain. So they have made the first house, they are pledging that to take a second one. They are taking investment-based lending. So there's something like DSCR, debt service coverage ratio. So it is something like it needs to be 150%, which basically is that the expected rental amount needs to be 1.5 times. Of the monthly installment. So on that basis, the loan is given for investments. So this is how the different population comes in. See, no matter how rich the person is, he would always prefer to take house on a loan, because at the end of the day, he doesn't need to give a lump sum. The interest rates in UAE are pretty low, and that adds to advantage. So maybe, I'll tell you something about arbitrage here. Indian currency depreciates around 2%, around a rupee or rupee 0.5 every year, right? Interest rates in India are around 8%, 8.5%, 8% around.
Yes.
And you get a mortgage loan here for around 4.5. Don't quote me, but it depends upon the category of the person and what type of housing he's taking. But if you look at the lowest, it goes up to 2.7 as well. So, if I'm talking about fixed 2.7, it will be around 4.4, 4.25, but around for the reducing whatever in those lines, right? But either ways, you will make an arbitrage just by, making an alternate loan here, and then, and putting that and buying a house in India per se, right? On which, so instead of paying a housing as, if you take a loan from Bank of Baroda versus us, there's a huge gap you will save. So things like that, you can use to your advantage, where arbitrage is there, that still you will make a good extra. So that's one thing. But yeah, each customer is different. Each customer's needs are different. So we cater that.
You had said that people should go for a mortgage, a loan, right? no matter if they have the cash and the capabilities to purchase, you know. But what are the pre-requirements to actually receive a loan from your investment bank?
Like not an investment bank, it's a normal bank. Investment bank do different type of stuff, right? And
sorry.
what I'm quoting here is not based on the current bank I work for, but actually throughout the industry and different banks I've worked for. So, that I want to be very clear. But see, usually the requirement is what exactly? They want to see your income is sufficient. It's like any country. Income is sufficient. They know your tenure of work, that you're looking fine, you'll be able to pay back. The property you're taking has a good rental value, has a stable value. Based on that, they decide what LTV, loan to value, need to be given to you. As simple as that. But, like one important aspect which I've seen happening in the UAE market pretty often, that people who, want to take a property, they take a personal loan along with a mortgage loan. And why does that happen is because there's a contribution requirement, usually when you're taking a real estate, right? So you need to pay based on the property, right? But usually, if you're taking an off-plan, 50% needs to be, paid off by you and 50% by the bank. They will only loan 50% to you. If you're talking about an investment, it goes up to, I think, 70. And I think residential goes up to 80. I think the rules have changed because from the time I have moved on, there were some changes happening there, but in something in those lines, right? So that additional 20-30% coming out of your pocket is usually a personal loan, right? And that really creates a stress for the person because he needs to clear a personal loan within a 4 years period, plus he needs to do his mortgage loan servicing. If it's on investment, if it doesn't get on rental because of the bad economic, economic crisis or something throughout the world or something, he would be in a bad situation. So, that's what we always say, it's always good to put your hand into something, but not so deep that it cannot come out, So you need to have that thing pretty straight, that when you're investing in a long-term project like a mortgage, you keep economic trends in mind, you make sure that your investment, right, over a period, that the market seems in a good scope for the coming year or two. Economic forecast could be used. A number of, like Bloomberg and others, give economic forecast over the coming 1 or 2 years.
Of course.
Some of them could be beneficial. So, but do your own research before buying anything. It's very simple to buy, but these are long-term projects. Like someone really senior told me once, when I'm still young, I'm 30, but, we're planning a family. And at that period of time, he told me, you know what, child is a 20-year project, right? I said, even your investments are. When you invest in a stock, you're looking at a 20-year future. When you're investing in a housing, you're looking at 20-year housing, right? So it's as important as that. And it's really important to understand the financial decisions. Most of the people, ignore these aspects. They like to override. Someone is buying apartment there, oh, let me buy. Someone is buying, this stock, let me buy, But the main thing to look into is the risk factor, which comes on a micro and a macro level. And never do something which everybody is doing. That applies to property market as well. If everybody is like, oh, this is a really good property, unless you have not done a due diligence, do not get your hand in. And especially when you're investing in other markets. Like people are investing from India in UAE, or UAE people are investing in India, they don't have full visibility, right? And in those lines, you don't know, like being here, I don't know what the economic forecast of India over the last coming 5 years look like. There's an election in 2024, I don't know who's going to come. Right? So in those lines, you need to keep economic factors in mind. You need to keep, geographical factors in mind, what is happening, financial factors, all these things. After that, you buy. It's as simple as that. So yeah, that's how it needs to roll.
No, that's amazing. I appreciate that. So, sir, the real estate in India, what is the main the base amount or fee for a villa or an apartment, considering the interest rate also to get the loan?
Please repeat the question once again.
I mean, like the requirement, if I must say, or the amount of money it costs to get a villa and an apartment. What is like the minimum amount?
Minimum amount for someone to purchase a house, or
yes, yeah.
So that depends upon the customer to customer.
Okay.
At a very cheap prices, also the things are available, and luxury, there is no end to it.
Yes, and for the panelist, he's going to give a free house, he said.
But like our banks over in India, they are giving loans up to 90%. So persons basically can look forward
90%.
bigger than their what they can afford. So that is the thing. Like the recession part, I just want to say there are two type of markets in India. One is basically saturated market where the inventory, there no more inventory can be added, and then emerging market where the inventory can be added, means there's some new project can come up. Generally, it has been seen where when the recession comes, it affects more to the saturated market rather than the emerging market. Emerging market means like new areas being developed, like Palm Jumeirah, he mentioned, so around 5, 7, 10 years back when it was developing. So that kind of areas. So they face lesser problems. However, the saturated areas, they face more issues. And whenever you consider the demography aspect, and you invest, the recession is not going to. Just keep the liquidity with you. Demography is a very, very important aspect while considering any property purchase you are going to buy.
You know, I'm a little pessimistic, you know, when I have a look towards the financial markets and towards real estate investment and others, you know. I personally have a habit that I'll never buy stuff when the economy is going up. I'll wait for the economy to fall. And I pray for the economy to fall sometimes.
Of course.
For a short period. But let it fall.
But that's
because when
dangerous.
it falls down, it's the best time to buy.
That's dangerous though, because you can wait like for years and years
Like, okay, I'll tell you something really funny, right? We all know every 10 years the economy falls. Some way or the other, internationally, something or the other will get busted, right? Right? We know it, right? The last one got busted 2 years ago. We don't know. It was a health hazard converting into a financial hazard. We do not know how bad it will go, but still the economy's recovered very well. They are trying to keep, like, there was an inflation rise. They tried to curb it with an interest rate rise, all that stuff, right? Good, perfect. So, you know that economies are very volatile. What you're going to pay is based on the, you know, economic condition, because the more the buyers, the higher the price is going to drive. So you know what? If you even have money sometimes, just keep it for investment in something which is safe. Wait for the economy to fall, and then you buy it because you know it's below the intrinsic value. And something which is below the intrinsic value will obviously go up. If it's a 1 crore house in Mumbai per se, if you're getting at like if there is, you know, it's a recession, things go bad, the buyers are, you know, fall a little bit, you get it for 85, 15 lakh discounted, right? You know it's going to become a crore as soon as the economy picks up after, you know, 1 or 2 years. And then you sell it off. You made like what, 15% return in 1.5 year if it goes up, you know, and even more. I'm just giving a normal, you know. So keep in mind that it's not always good to invest in all the time. Keep the money aside when you feel that everybody is doing something. You know? If you go against there's a very good say, you know, if you go against the market trend, you will get crushed. But if you go against the economic trend, you will make money.
Yeah, I agree with you, but we builders, whenever we want to sell something of our, say, some commercial project is coming, so we make it very luring sort of a thing, like we will reduce the prices by 40%, 50%, up to 50% also in a pre-launch, and then 40% in launch. So this particular, I'll just give you example, say with a builder, you can make arrangements, say $1 million property is there, you just make it, and the size is 1,000 square feet. So you make an arrangement that you will buy prior to this thing, and you will be giving me $25 lesser. So you gain 25,000 rupees, and the payment plan is say 10, like this. It's growing as per the this thing. So you, instead of 1 million, you are investing $100,000 only. And within some fraction of time, you are gaining $25,000. maybe in to 15 minutes. So this kind of 25% of return in just 15 to 20 days. So these kind of luring things one should always consider, because builder before starting the project, builder wants to sell complete inventory, or he will not start the project till the time 70% in the inventory is sold, because the liquidity will keep coming as and when the demand goes. So he will compromise on the rates also. And for the pre-launch, you just make arrangement with me that I will buy this much of property and you give me at this price. So I told that only $25 on 1 million property, 1,000 square feet, you made arrangement and you gained $25,000. And you just paid 100,000 basically dollars as an initial investment. But when the launch is there, so this $25,000 he has to increase the price over a $1 million property. So when the buyers are there, so this inventory will be available at a cheaper price. So you can exit as per your this thing. So go with the market. I will say just go with the market. Generally, after the RERA, builders also want to make the profit. However, basically they for their investor they think very positively. Because if the investors will not come, then how will this project be sold?
The strategy he's talking about, I'm pretty much aware about it. Strategy he's talking about is you book the house with the initial amount, right? And then you have tranches, loan tranches you have to pay. Now, basically, I know that this property is going to take 3 years to develop and every 6 months I need to pay. I went till 1.5 year per se, right? I paid 1.5 year up, and the rate of the builder has gone up. At a little bit lower margin, I can sell it off at that period of time.
Yes.
I'll make a margin.
Yes, very rightly brought
return. At the same time, if I wait till the delivery and the house is ready, the intrinsic value of the house, the feel of the house is there. You can sell it when almost all units are sold out by that time. Then you can start selling your house as well. So this is another way of making money. Yes, that's correct.
This is basically compulsion of a builder. He has to launch the unit at a lesser price than the ready to move in property. Otherwise, the investor will come and say, why will I buy from you?
See, normally, right, the major risk of investing into property is that the property wouldn't complete because of some or the other reason, or the approvals of the government might not be in place, or there might be an economic downturn, the builder might go bankrupt, right? So in those lines, these are the type of fundamental risk which come out from these factors, and those needs to be accounted for. A builder needs to have credibility. If from a real estate perspective, you should always look when you invest in stocks, you always look at the cream first, and then the middle guys, and then the lower guys. There's more risk with the lower guys. Then as the brand develops, we do look at the balance sheet. We look at what they have. Big guys also go bust, but usually we do consider them a little bit more safer. So in those lines, you need to have a look at it. Where exactly the project is, majorly one difference is that the location of the project also makes a huge difference. Like I told you, Mumbai, limited land.
The basically demography, complete demography, yes.
Demography plays a huge important factor, which might not impact even the economic factors might not impact it sometimes. Like you said, the emerging areas, if you are bust, you need money, or if you get and you come to a point where you want to sell your house, where will you go? You will go to a suburb, right? You'll be like, I'm not making money, right? Let me buy a suburb for 50 lakh rupees and sell my 1 crore house today. 50 lakhs I have, I can maybe invest and do something with it and make my living. From a normal
This is
mentality.
basically cycle, yes,
Right?
good.
So emerging areas always keep growing in those lines. So this is how the trends are exactly. So different strategies, but same result, money.
We can take few questions from the audience also. If anyone have some question, please.
Okay. Quickly, I just wanted to ask you something. Many people that have never been to Dubai or they've never came to the UAE are saying that Dubai is a bubble, it will burst anytime soon. What's your thought on that? Do you recommend your clients to purchase a piece of land or property in Dubai?
See, honestly, I'll give my personal opinion. It doesn't relate to my organization or any other organization I have worked for. It's currently my view. Is that, and and I am currently sitting in the UAE, so I don't want to say anything. But yeah, you know what? Like, see, Dubai market, unlike any other market, has the same fundamentals, right? And your motive needs to be very clear what you want to do with that money. You want to invest it. You're gonna, are you buying a house because you don't want to pay rent when you're in UAE? If you're somewhere from abroad, you're looking for an, fantasy house. The luxury which Dubai gives you. You want to have that. What exactly you want to do about it, right? You want to put houses here and get rental return, and which you'll be using. So some people have excess money, right? And apparently they invest here and they put their houses on rent. So depends upon what you want to do. From an investment perspective, I recommend Dubai market. There's nothing wrong with Dubai market. They have exceptionally done well. If you look at just 50 years ago, they were just barren land. It was just sand. And today they are one of the leading economies in the world. So they know what they are doing, and you can have the trust on the economy here. Apart from that, still open. Indian economy is great to invest in. There's some economies where housing is a real crisis. Those economies are good to invest in because your house will always be on rental. So look into those aspects. Just like you do research for buying your stock, you need to do research before you buy your real estate.
Of course. Yeah. Yes, sir. Yes, please. There's a mic behind you.
There you go. Okay. Thank you, sir. Hi there. I'm curious, we had this recession in Germany in 2001 or something, a serious one, and as usual, a lot of the money goes then into real estate, since real estate is, in Germany we say Betongold, like concrete gold. Louder? Sure, louder. Then I sit down. Genau, Betongold, and then in 2011 there was the next recession, and for my company by then we consult real estate developers. It was for us the best times because the usual stuff that has been built not with much consciousness because everyone bought everything, it's just was on the rise all the time. And when the market stops to develop so fast, or even is in an increase, then those people who can afford it sit down and think about how to improve the real estate. And of course, you can't improve the way you construct, but you can improve the way of the product concept in terms of special target groups, like special real estate for elderly people, or education, or life science, or a mix of, in city quarters, of affordable housing and luxury housing. So the question is, since I hope this is no offense, my impression is that I only know Europe, that the European market is always a couple of years ahead, so that's the British market is the forefront. Then comes Northern Europe and Berlin and Germany and stuff. And I'm curious if, since you now spoke a lot about the recession, and you said just buy real estate when the prices go down and then they go up, is there intention, or do you feel there's an intention to somehow rethink the whole real estate thing? That real estate is not only a built hardware, if you want it like that, the three-dimensional space that is a building, but real estate is much more the software that runs the space. You feel me?
I get what you mean, even though, yeah. But it all depends on the current market cycle the area is in, and the demand of the area, and the benefits that the area can bring to people that are flocking to that specific place. Yeah, you want to try?
Actually, I would like to address your question, but honestly, I couldn't hear it so well. I'm so sorry. What I understood, let me just reiterate, tell me what needs to be added, was that, I understand you talk about different markets and where they move, and then you were like, for the German markets, it's been stagnant after a point. That's what you've been talking about, right?
Yeah, maybe a bit more specific that to think you have, okay, let's put it differently. Real estate is a product where you can invest, right?
Yes.
And it's a product where the prices rise constantly if you regard it over tens of years.
That's correct.
And of course there are cuts,
Yes.
and then it continues. That's
That's
why
correct.
it's called betongold,
Yes.
golden concrete. Nothing can ever burn if you have long enough breath. And then there's a point when the air gets thin or the market falls, and you have to think about how can we raise the value, like making value-added real estate, for example, service apartments, or like to make the product more than just a built three-dimensional space. That's what I mean with the hard.
Okay, so you're saying that there's a change in the model of the real estate. Is that what you're talking about? Like to raise the value, such that before we used to only have real estate apartments, now we have those real estate apartments which provide garden, jacuzzi, other things, and they have these people coming in, making the room for you, all those service apartment type of facilities. So you're saying that there's a trend change which is happening in the real estate to keep the real estate prices up. That's
Is
what
it
you're talking
happening,
about.
yeah?
And that's completely correct, because see, real estate is what exactly? It's a product, it's a commodity like any other. Why do we require commodity? And why do we buy a Honda and then a Mercedes and then a Porsche and then we go to a Ferrari? Why is that? It's because of the
And
reason.
then you buy a classic car.
Yeah?
And then you start buying classic cars.
Yeah, that's correct. Classic car. So we do that because we see a utility, right? And what is the market doing now is, let me give you a little more, but you pay a little more higher. Right? So that's what they're doing now. And you see this trend throughout. Like, I remember when you go back in 90s in India, none of the buildings have swimming pools, right? None of the building has play areas, whatnot. But if you go to Delhi today, where this guy comes from, and I was there about 2 weeks ago, and trust me, the infrastructure they have developed, there are societies, where there are playing rooms, there are parking, designated parkings, a swimming pool, whatnot, just like the luxury you get in Dubai, Abu Dhabi, same thing here, there, So the only thing is that provide a little marginal value and ask for a little higher. And that's the economic trend of, that's always been there. See, what happens is that prior areas where things were developed, right, those become the center locations, because over time, there are more people, more commercial things happening there, and it becomes the center of the city, usually, right? It gets matured, the place. And then the new areas which are developing, people need to travel back to, the main city many a times. So they're like, why do I buy a house a little far? Because the rates in the city are higher, and it will not give you the same amount of facilities, right? So that's how they try to pull you a little far away from the city. They give you a little bit better budget, and they'll be like, oh, you know what? I've included this. This is a new commercial property now. There's a new residential property now. This is what they keep doing. It's like a very normal thing, right? How cars developed. It's the same thing, right? So just like that, it's a product. And yeah, the thing is that residential, the core intrinsic value of gold is very similar to core intrinsic value of the residential, especially for the first house, because people need to live somewhere, right? So as soon as economy gets richer, after a point, there might be more fluctuations in the housing industry, because if people are buying the second or third houses and there is no housing demand, then it will fall. But until and unless one person, one house goes ahead, like one family, one house, it will keep going up.
See.
I think that answers your question.
Yeah, I was mainly curious if this is already taking place in your areas.
Thank you.
Thank you.
Sweet
So I think the time is up. So the guy who claps really hard, Anurag is going to give him a house because he's a builder, right? So we'll make it that way.
We would love that. We would love that.
Yeah, I should be giving the loan. I wish I was so rich.
Lovely, lovely. Well, thank you so much, guys.
Thank you so much, Anurag. Thank you
nice
so
to
much.
meet you. And
Thanks to both of you.
Shaki.
yeah,
It was really a good session, and it was very knowledgeable for maybe others also.
yeah, absolutely.
Thank you so much. And a pleasure being alongside you. Thank you.